Okay. In previous class, we started discussion on assessing taxable income from business, and we gave an idea regarding which kind of income are classified or which kind of income are categorized or included in the income from business. And in addition to that, we also shared uh, some issues that you need to address when you calculate the taxable income from business. So one major issue is we need to adjust the business income according to we need to adjust the business income which we have estimated using the financial accounting standards. We need to adjust that income in accordance with the tax standard, because financial accounting standard IFRS differs some extent from the tax standard applicable in different tax jurisdictions. But international financial reporting standards or international accounting standards, though these standards vary across the country, but their divergence or the differences is not too significant. But you need to acknowledge that the tax standard in different tax jurisdictions are significantly different. So according to the tax standard applicable in specific tax jurisdiction, we need to adjust the income and the profit we estimate using the financial reporting standards. So in doing that adjustment, we mentioned that we need to accommodate, we need to add back those expenses which are not admissible according to tax standard. And we also need to add back those expenses which we didn't include in following the financial reporting standards. And also, if there are some adjustment we didn't do in financial reporting, but we need to do in compliance with the tax standard, in that case, we need to make some adjustment. So in previous session, when we concluded, we are discussing the section where we mentioned that we need to think of the inadmissible expenses. Inadmissible expenses. So we need to address that how much expenses of a particular category of expenses are allowed, or how much of expenses of a particular expense category is not allowed. So we talked about, if you can recall, we talked about the rent paid for the premises where the business is situated. And we also talked about the repairs and expenses of the business premises. And we mentioned that when there is a proportionate allocation of the space into the business and to the dwelling house of the business owner, the expense attributable to the business need to be separated. So we showed that we need to use some rules to find out the proportionate expenses attributable to the business. So I don't like to repeat that from the previous discussion. Rather, I like to continue from the previous discussion with the new category of expenses in which we need to check that how much of that expense is inadmissible or how much of this expense is admissible. So first of all, right now we are still in discussion with inadmissible expenses in a sense that uh, precisely this is inadmissible and allowable. These are just two flip parts of a single coin. So if we discuss here with the admissible expenses or admissible deductions or admissible allocations, you can figure out that the remaining portion is inadmissible. So if our discussion topic is admissible expenses, at the same time, you can also recognize that how much is inadmissible and which expenses are specifically inadmissible or what extent of a particular expense is inadmissible. So let's discuss with another point, that is for business expenses, you see that this item of expenses is one of the common items, that is bank interest payment, or we commonly write this expense that it is in this way, interest expense. So you know very well when you see that there is an interest expense in the expense items, obviously the bank has taken, the entity or SSC in our case has taken a loan. That's why SSC needs to pay the interest expense. So matter is that uh, there are some, you know very well, obviously the interest expense is admissible expense, but the question is what extent? What extent of interest expense is admissible? And what things you need to confirm that to make sure that you are in compliance with the rule so that interest expense is admissible. For example, there are two projects, project A and project B. So you are SSC Mr. X. So let's say you have taken loan for a business. Let's think of these projects as two businesses. These two projects are two businesses. So the SSC is same. SSC is same, I mean the same owner of these two businesses, Mr. X. So say if it is like that, Mr. X has taken loan from bank. Mr. X has taken loan from bank saying that I am taking this loan from you to finance a plant and equipment which will be used for this business, business A. Have you got this case, what Mr. X has mentioned to bank when he was taking loan from bank? I'm taking loan from you for financing a plant and equipment in my business A. So said he has taken loan approximately say 1 million. So after taking this loan by Mr. X, what Mr. X has done, Mr. X has spent 0.8 million for purchasing the plant and equipment, what he mentioned to bank. He has spent how much? 0.8 million. The remaining 0.2 million he transferred to the business B for the purpose of business B. So when he will prepare his tax statement, he can show the interest expense. Say interest expense is 100,000. He can show the interest expense amounting 80,000 taka, not 100,000 taka. Because the rule is you need to spend the whole amount of loan for the purpose you mention to the bank. If it is such that you allocate money to a purpose which was not mentioned to the bank during making loan agreement, in that case, the amount of loan which has been used for the mentioned project or mentioned business, that proportion of the interest expense is allowable expense. Have you got it? Or it looks like complicated? I don't feel it is complicated to you. It looks like the rent repairs discussion we made in the previous session. Have you got it so that I can continue? Anyone can confirm that you have understood it?
Sir, if you please repeat it, it would be better for us.
I will not repeat from the very beginning, but I just like to mention that you have taken a loan from the bank amounting 1 million, mentioning that you will use this loan for the business A, or it may be such that you have mentioned that you will use this loan for a specific asset. Say that asset name is asset A. But in reality, if it is such that you have not used that total loan for that project or that asset or that business you mentioned in the loan agreement, you have used a proportion of the total loan for the mentioned purpose. In that case, the interest expense allowable will be equal to the proportion of the loan which is attributable to the project you mentioned to the bank during the loan agreement. That's why we are considering that 80% of the interest expense will be allowable. Is it clear?
Yes, sir.
Thanks. So let's continue. If it is such that you have taken money from Islamic banks which do not charge interest expense, but they charge allocation, they charge a share of profit from you. In that case, the profit you are sharing with the banks which are maintaining Islamic principles, that proportion of profit you are sharing with the Islamic banks is also allowable expense, or you can say admissible expense. If it is such that you are probably familiar with transfer to special reserve. So sometimes to avoid the taxes, SSC is likely to transfer excess amount of money to some special reserve or to some reserve account. So that reduces the available profit for taxation. So that's why the tax authority has mentioned, or tax authority has given restriction that if you transfer a special reserve, if you transfer profit to the special reserve, usually this kind of reserves are maintained by banks and financial institutions. You can hear or you can see from the newspapers that this time these banks has has faced the declining profit due to increase in their reserve for the upcoming uncertainties regarding the loan collection and probable increase in the non-performing loan. So there's a restriction that uh, for tax purposes, what you can do, you can transfer maximum 5%, maximum 5% of the profit to the special reserve, not more than that. If it is, you have transferred 6%, you have transferred 6%, in that case, 1% transfer is extra. When you transfer extra, you have transferred how much extra? 1% extra. So for tax purposes, why 1% extra? Because the allowable is 5%, but you have transferred 6% of the profit. In that case, what you need to do? You need to add back the excess transfer to the profit for tax purpose. Have you got it? Say your profit is 10,000. You are allowed to transfer 500. You are allowed to transfer how much? 500. But you have transferred 600. In that case, what we need to do? You already have transferred. I mean, the profit what has been appeared here, it is after transfer. Now, how much you need to add back?
So 100.
You need to add back 100. For what reason? Because you have transferred over the amount that is
100
allowed
extra.
to you. Yeah. Okay. Next, if you make any repairs expenses to the building, to the plant, to the machineries, to the equipment, which are in your business, in that case, the total amount of repairs expense is admissible expense. Okay. So that is very simple. If it is such that you have taken insurance policy from insurance company for protection of the risk associated with your business, in that case, the insurance premium, what you regularly pay to the insurance company is a part of allowable expenses. There is no restriction on that. And one of the very discussed expense related to tax, that is the depreciation. It has a significant tax consequences, which has no cash flow consequence. Why it has no cash flow consequence? Finance is all about cash flow, but why depreciation is significant for us?
So
I mean,
এটার ফলে তো প্রতিষ্ঠান থেকে টাকা চলে যায় না, এটা একটা অনগদ লেনদেন এই জন্য।
right. So that is how accounting and finance perspectives are different. One of the very good example is that how accounting look at the depreciation and how finance look at the depreciation. For finance, depreciation is a kind of, you have no cash flow consequence, but in accounting or financial reporting, you need to make these expenses following the financial standards. But it is heavily related with the tax purpose because it reduces your taxable profit. So anything that reduces your taxable profit is attractive. Anything, either underestimating income or overestimating expense, or anything you make for expenses. It's not, I'm not suggesting anything that for reducing your taxable profit, you will make expenses which is not required. It is not that case. The out of the expenses you face or we face regularly, depreciation is attractive in a sense that without having any cash outflow consequence, we are in opportunity to reduce our taxable profit, but it actually does not involve any real cash outflow. But for tax purposes, you need to be careful that you can't use this opportunity indiscriminately to reduce your tax burden. So tax authority is very aware of your, I mean the assessor's behavior, that they will try to reduce this, they will try to opportunistically use this kind of depreciation for reducing their tax burden. So the thing is that for tax purposes, the depreciation standards are different. So you know very well that in financial reporting mechanism or financial reporting environment, you need to follow some standards for charging depreciation, that how much or how you need to allocate the depreciation, and uh, how long you can allocate the depreciation expenses, and what is the life of a particular asset you need to recognize for depreciation. There are some standards with which you are very much familiar. I think you are familiar with modified accelerated cost recovery system, max depreciation. You are familiar with a straight line depreciation. You are familiar with double declining balance depreciation. Okay, I'm not stressing that, but whatever the practice you follow in the financial reporting regarding the depreciation, when you prepare the tax return for the income from business, you need to follow the tax standard for calculating your depreciation. Okay, so now what is the source here? The source is third schedule. Can you recall there are some schedules in the income tax ordinance? Can you recall? There are some schedules in addition to the sections in the income tax ordinance 1921.
84.
84.
84. Okay, that schedule is third schedule. Okay, so that schedule has specifically mentioned that for say for plant and equipment, how much depreciation you can allocate. Say if it is right now we are in third schedule, so where it is available, I showed I showed to you the income tax ordinance from BD laws. Can you recall this site, BD laws? The
Yes,
very
sir.
first class. Okay, so by opening the income tax ordinance, in the very ending of the ordinance, you will see the link for schedules. So by opening that link, I have opened that schedule. Okay, so you see that there are some asset name, you see. Okay, what has been mentioned here? Computation of depreciation allowance and amortization. Okay, so some particular asset names have been mentioned here regarding building, regarding a structure, then some other assets which may be used by you, then tractor, oil engine, power pumping machineries, and then how much percentage can be allocated. Say, if I like to take one particular asset, say, accelerated depreciation allowance on machinery and plant. So you will see here, but let me show you for the first year in which the undertaking starts commercial production. In that year, you can charge how much? 50% of the actual cost of plant and machinery to the SSC. And for the next following the second year, you can allocate how much? Depreciation, 30% of the actual cost of plant and machinery to the SSC. And for the next following third year, you can allocate 20% of the actual cost of the plant and machinery to the SSC. So you may practice differently for financial reporting standards. Whatever the practice you follow for your accounting purposes, that is your discretion. But when you prepare your tax return, you have no discretion. You need to strictly comply with the depreciation depreciation rates, depreciation system mentioned in the which schedule? Third schedule of the income tax ordinance. Okay. So when you will do your real practice of preparing return for income from business, in that case, you need to take reference from the third schedule. But for exam purpose, you will be given that the actual depreciation is this amount and tax depreciation is this amount. Say actual depreciation is 20,000, but tax depreciation is say 15,000. In that case, there are two ways to adjust the profit. One way is deduct, sorry, not deduct, you already have made deduction for 20,000. You need to add back the depreciation expense. Here is the profit, okay? You need to add back the depreciation expense according to the accounting standard, and how much you need to subtract. How much we need to subtract? How much is allowable? How much is allowable?
Sir, 15,000.
15,000 is allowable. In that case, we can subtract the allowable depreciation. In that case, that is the adjusted profit for what purposes? Tax purposes. That is the taxable profit. We'll try to see this kind of example in a mathematical problem, what we'll do later in today's session. Okay, next is investment allowance for a passenger vessel or a fishing trawler. So it has been mentioned that if you buy a passenger vessel or you buy a fishing trawler and the vessel and or the trawler what you have purchased, its specification are under the criteria mentioned in the tax regulation, that if you buy this trawler or if you buy this vessel, you will get investment allowance. In that case, for making investment in vessel, for making investment in fishing trawler, you will get 20% of the purchase price or the original cost of that fishing trawler or the vessel as allowable deduction. So in that case, what can you do? You can calculate the investment allowance in this way of this amount, and you can reduce your profit, you can reduce your income by that amount. Say that amount is say, do you have any idea that how much a trawler price can be? Fishing trawler, any idea that how costly it is? Or you have an idea that how much a car, if you like to buy a original brand new car, that how much cost it may look like in a very medium range, you know it very well. But if I ask you that how much the price you need to pay for buying a fishing trawler, which are ocean going fishing trawler. You have seen the fishing trawler, the river sea?
Yes, sir, I have seen.
Okay. May I ask you that how much price we need to have for buying a fishing trawler? It is
Sir, I
total.
didn't ask them actually.
Yeah. Okay, just an idea, just a guess. The guess can be close to right or very far from the right answer. But I, just for my curiosity, I just like to ask from you, because I have seen such a figure on today's newspaper that is far from my expectation. That's why I just like to check your guess that how much price you need to pay for a fishing trawler.
Sir,
Sir,
about
something around
5
100,000.
lakh.
Something around
100,000.
100,000. Then 5 lakh. I have got another figure.
এক crore এক কোটি বেশি
Then,
হবে
then has anyone mentioned 1 crore, something like that?
জি স্যার
Okay. Okay, fine. 1 crore. Okay. Any other estimate? Probably we have got some very closer figure, but I just like to get us others' opinion. You can give me an option in between these two numbers, or you can give a option just by adding all these numbers. Any more guess?
Sir, 15 lakh.
15 lakh. Okay.
Though it is too much.
I mean, it is far from your expectation.
Sir, right, 12, 15 lakh. Not
15 lakhs.
yes.
Okay, okay. I mean the 0.5 million. Is it right?
No, sir, 150,000.
150,000.
Sorry.
1.5 million, sir.
1.5 million, yes, sir.
1.5 million. Okay. Now is it okay?
Yes, sir.
No, sir.
Not it's okay. Now it is okay.
Yes, sir.
Yes.
Okay. Okay. I have got the figure 80 to 90 lakhs today. It has been mentioned in today's newspaper that this is the time the fishermen or the boatmen are preparing their trawler, and it costs around 80 to 90 lakhs. So you can think of that how a car owner who has the car worth of 25 to 27 lakhs, the fishing trawler owner is 3 times richer at least.
Yes, sir.
Got it? Okay, so it is interesting. So we don't need to underestimate the worth of fishing trawler as it plies on the river or ocean. Okay. Okay, so how much investment allowance you will get for buying a fishing trawler or buying a passenger vessel? How much expense you can show in the name of investment allowance. How much?
20%.
20%. So let's continue our discussion that admissible expenses. Okay. Say you have some machineries, or you have a plant, or you have a building for the purpose of business. So you, the users, set some expected life of these assets, that for this time period, this asset can be used expectedly in line with the expectation. So say if you buy an asset of which expected lifetime is 5 years, so over the time you are using this asset this asset degrades in its worth. So after 2 years or after 3 years of using, the worthiness of the asset declines. So when you go for selling this asset, you have to discount your value. You have to discount the asset's worth. And if it is such that, say, technology A, you have this technology A, and another technology which you do not have, that is technology B. So when you bought technology A 5 years back, there was no technology B because it was not invented then. But say technology A has a life of 7 years, you expected that it will continue for 7 years. But when after 5 years, technology B has become available. In that case, though you have used technology A for 5 years, but your expectation is that you can sell your technology A to a second person in the secondary market with the worth of remaining 2 years value. Which technology? Technology A, because its life expectancy is still 2 years. But if it is such that meantime technology B has become available, in that case, will technology A will pay you same money what you expected? As the alternative technology B has become available, these are alternative technology, but the B are not available when A was initiated. Got it? Even after technology B does not has not been invented, technology A after several years, it starts to decline in terms of its worthiness. So over the time, any particular asset get obsolete. But it is a continuous process, it gets obsolete. Okay. So have you ever used the CD? Have you ever used CD in your life?
Yes, sir.
Okay. So nowadays, you use CD frequently or you use USB frequently?
Sir, USB frequently.
You use USB frequently. But 10 years back when, not 10 years, you can say 12 years back. I mean, approximately 12 years ago, there was a common use of floppy. Have you heard about it? Floppy disk?
Yes, sir.
Okay. So for some limitations of each of these memory, new updated memory has become available. And you see, once upon a time, we need to buy the 2 GB USB at a price of more than 600. Now you can buy 16 GB at the same price. It was 2 or 3 years, at least 5 years ago. Have you got it? So if you have a stock of 2 GB USB in your shop, you have 2 GB stock, 2 GB USB stock in your shop. In this time, will it be available? Will it be okay, or is it possible for you that you can sell the 2 GB USB at the price you expected?
No, sir.
Now you have to sell this kind of USB which become obsolete now. Obsolete in a sense that 2 GB is now very limited purpose or very limited use. People are nowadays starts buying USB from 16 GB. Okay. So over the time, for several reasons, I'm just giving you some context. An asset can become obsolete. So it is a continuous process. So, so when you go for selling your fixed asset, you also face this kind of experiences that you expected this amount of worth, but you can actually sell it at a price which is less than the worth you expected. So you have found the reason that the asset has continuously got obsolete. Okay. So tax authority has given is very considerate to you. That's why tax authority has given you an allowance which is known as obsolescence allowance, which is known as obsolescence allowance. Okay. So in that case, if it is not like that, it is not like that the asset is with you. You are not intended to sell or destroy that. In that case, you cannot charge the obsolescence allowance. But if it is like that, you want to demolish this asset or replace this asset, in that case, you can show obsolescence allowance, and how much of the obsolescence allowance you are eligible to get for a particular asset, you need to check the third schedule. Have you got the concept of obsolescence allowance? Okay, let's continue. There is a tax known as land development tax. Have you heard about this tax? Have you heard about this tax, land development tax?
No, sir.
Have you heard about land revenue? Anyone? Okay. This tax is collected by the government, but not through the NBR, but through the land ministry. There is a we have the land ministry. Have you heard about it? We have land ministry, Ministry of Land.
Yes, sir.
Okay.
Yes, sir.
It has an authority. It has authority to collect the land development tax from the landowners. In economics, it is known as land revenue, but in practice, it is known as land development tax. So if it is like that, your business is situated at your own land and you are supposed to pay the land development tax to the authority, to the land ministry in the form of, it is usually collected by the land office. You may be familiar with it if you have aspiration to become the Assistant Commissioner of Land. In that case, you will have the task to oversee it, that the land development tax has been clearly paid by the landowner. Then you will take their application to transfer or to sell their to transfer or to transfer their ownership title. So if land development tax is not paid clearly to the land administration, in that case, you will not be able to transfer your land, or you will not be able to sell your land to the buyer. Okay, so for tax purposes here, we need to recognize that this tax, whatever you have paid or amount you need to pay, that total amount is admissible expense. Okay, then you pay bonus to your employees. In that case, obviously it is assessable. There is no restriction on that. And another expense with which you are very much familiar, that is the bad debt. Okay, but you need to show evidence. You need to recognize that the amount of receivables what you are showing as bad debt is really bad debt, and you have sufficient evidence to believe that this amount is the spelling correct? What does it mean?
Yes, sir.
You have no chance to recover it. In that case, that is the bad debt. Okay. So there are some additional regulation which were applicable in previous years are not applicable in recent years or not applicable in current years. You may check those from your text. I'm not stressing the discussion to detail, but the thing is that you need to provide sufficient evidence regarding the bad debt, the amount of receivable you like to show as bad debt. And if it is such that, say, right now we are in income year 2020, 21 going on right now. Okay. If it is such that you believe that this amount, particular amount will be recovered, will be able to recover, but later, say 2022, 23, you realize that this amount of receivables in this year, which you believed as recoverable, has actually appeared that it is a kind of bad debt, it will not be recoverable. Though this bad debt is attributable to this year, what can you do? You can show the bad debt of this year in which you have recognized it. The recognition deferred because in this year you had a belief that it will be recoverable. But when this year closed and you submitted your return, later you realize that it will be considered as bad debt, but it has already been closed. So what can you do? You can take the bad debt attributable to the particular income year to the following income years. Okay, there is no restriction on that. But the thing is that in relation to bad debt, if it is such that you have shown a bad debt, say 20,000 in a particular income year, but after that income year, I mean the following income year, out of this 20,000 bad debt, 5,000 has been recovered for your effort. In that case, what you need to do, what your intuition tells. What does your intuition tell? Should you hide this income? As you already have shown bad debt, if you add back this, your taxable profit goes up. What you will do?
Add back করবো স্যার।
You need to add back. You need to add back the amount what you have recovered later, though that amount was part of bad debt in earlier years. Okay. And there are some additional expenses which are admissible, kind of revenue expenditure. You are very familiar with the difference between capital expenditure and the revenue expenditure from the financial accounting one. Capital expenditure and the revenue expenditure. Are you familiar with the difference between these two? If you are not familiar, you can ask, then I can give you a brief idea. Then we need to continue. You make some expenses in your business for purchasing assets, purchasing something which has a very long estimated life. And you do these expenses for setting up your business and for initiating your business. And this expense will give you long-term consequence, say more than 1 year. It will give you benefit for say 3 years, 5 years, 10 years. Say you have constructed a factory. You have constructed a factory. Will this factory give you benefit for more than 1 year?
Yes, sir.
In that case, this kind of expenses are known as capital expenses. In addition to these expenses, you make some regular expenses in your business, which are not like will have a very long-term implication, rather will have a short-term implication. And these expenses are required to continue your business, not to set up your business, to continue to make your business ongoing. So some of the examples of those kind of expenditure is that you buy the raw materials, you pay wages to the labors for converting raw materials to finished goods, you pay rents, and you know very well these expenses will have consequence for a very short term, usually less than 1 year. In that case, these expenses are known as revenue expenses. So, which expenses are shown in the financial statement? I mean the statement of comprehensive income. Capital expenses or revenue expenses?
Revenue expenses.
Statement of comprehensive income. Okay. And this expense are shown in the capital expenses are shown in the
Balance sheet.
balance sheet or a statement of financial position. So in tax return, when you show your expenses to estimate your profit, to calculate your profit, for what purpose? For calculating your taxable profit. Which expenses you are allowed to show? Revenue expenses or capital expenses? Revenue expenses or revenue expenditures, not the capital expenditure. Okay. There are some allowances which look like capital expenses, but you need to recognize, say, investment allowance. These are some specific, you need to recognize that those expenses are revenue expenses. But some expenses can be recognized in the tax return, but those expenses may look like capital expenses, are actually capital expenses. So what kind of expenses are like those? Let me show you reference from income tax ordinance. This one is the income tax ordinance here. The point is under the section 29, deduction from income from business or profession, section 29, then 29(1), then 23, 22, 23. Okay. You see the highlight?
Yes, sir.
Any expenditure in the nature of capital expenditure laid out or expended on the construction and maintenance of any educational institution or hospital established by the assessee for the benefit of his employees, their families, and their dependents, or any institute for the training of industrial workers with some condition. What are those conditions? You cannot charge any fee for providing the services to your employees, and you cannot deduct or make any allowance. No deduction or allowance is claimed under any other clause of this section for the same income year in respect of expenditure represented either wholly or partly by any asset. For making this expenditure, what you are doing here, the condition, second condition is that you cannot claim benefit with the reference of other section. So when you are taking benefit of this, you cannot take benefit from other section. So how it is benefit? Can anyone tell me? How this expenses is benefit to the SSC? Because it is a, when you are taking a capital expenditure, this is a very expensive expenditure compared to revenue expenditure. Capital expenditure, obviously, a higher figure compared to revenue expenditure. Is it?
Yes, sir.
Okay. So in that case, if it is possible for you to allocate expenses which is capital expenditure nature, in that case, will your taxable profit come down? So obviously it is a benefit that you can reduce your tax burden. Okay. So you need to check other issues or other expenses which are admissible and inadmissible. Our discussion is not exhaustive. I mean, we have not discussed all the expenses allowable or all the expenses admissible. We need to check the remaining. Okay. Now let's discuss some expenses which are specifically inadmissible, and it may look like admissible, but for some incompliance of the SSC, the admissible expenses can become inadmissible. Though expenses are allowable, but for some non-compliance, the expenses may become inadmissible. So one interesting example is, say you pay salary to your employees, salary. So obviously salary should be an admissible expenses. But if it is such that your pool of employees or some of your employees to whom you paid salary, they are required to have their TIN number. Sorry, or they are required to have to pay the TDS. I mean, when you, as an employer, you are paying the salary to your employees, you are supposed to charge TDS or to deduct TDS before paying salary to them. So this TDS is a portion of the salary. So instead of taking out TDS from the salary, you paid them full. But you are such an employer, NBR has imposed restriction. NBR has, according to NBR guideline, you are one of those employers who is supposed to deduct or who is supposed to collect the TDS from the salary he or she pays to his employees. So if you do not do this, if you do not make TDS, the salary expenses will become inadmissible. Have you got the point? Have you got it?
Yes, sir.
Okay. Now, say as a part of your business activity, you make payment, but that payment requires some TDS related to salary, but other than salary. Say there is a person who is say contractor, okay, who is agent of doing some works on behalf of you. And when you make payment to him, you are supposed to charge TDS. But if it is like that, you have not charged TDS from him. In that case, the payment you are making to him will become inadmissible. So I think that is the clear to you. If it is like that, you make payment of salary, remuneration, interest, or commission to any partner, business partner. In that case, that is inadmissible. If it is like that, you have make payment to employers, say provident fund, but that provident fund is not approved. You can recall from the chapter income from salary, there was 3 categories of provident fund. Can anyone recall? Can anyone share that we mentioned about 3 categories of provident fund?
Yes, sir. Strategy, government provident fund, recognized provident fund, and unrecognized provident fund.
Okay. So in that case, the allocation, if you make for unrecognized provident fund, that is not admissible. Okay. So then we can make other discussion, say, can you recall the perquisite concept from the salary? We made some examples for perquisite.
Yes, sir.
Okay. Is the festival bonus perquisite?
No, sir.
Is the leave encashment perquisite?
No, sir.
Okay. Is the house rent allowance perquisite?
Yes, sir.
Okay. So you need to separate the perquisite items out from the items given to you. So it has been mentioned that you can make expenses for perquisite to be payable to your employee, but that amount cannot exceed 550,000. That means what is this maximum? 550,000 amount of perquisite you can spend for each of the employee. That means for each employee, you can spend how much maximum? 550,000. Have you got it? If your employee is a kind of disabled person, in that case, maximum perquisite expenditure you can make for him is this amount. How much it is? 2.5 million. These figures look like ceiling or floor? These figures that you can spend maximum 550 as perquisite for each employee and 2.5 million if the person is disabled. This regulation, this restriction is a kind of floor on the amount or ceiling on the amount. You know these two terms, these two words, the meaning of floor and ceiling? Are you with me?
Yes, sir.
53 people are with me. These figures look like floor or ceiling. You know your ceiling at your home? You know floor at your home?
Yes, sir.
Okay, floor is on the down and ceiling is on the
Head.
up. Okay.
Yes, sir.
Now we have kept on a higher figure. That means you cannot go beyond this. In that case, we have put a ceiling or we have put a floor.
Ceiling, sir.
We have put a ceiling. We have kept that amount. That amount cannot exceed this amount. Okay. Right now, in our financial market, the lending rate cannot exceed 9%. The deposit rate cannot fall below 6%. Have you heard about this ceiling floor restriction? It is kind of floor. It is kind of Floor or ceiling?
Ceiling.
Ceiling. So you need to recognize, you need to understand this in that way, but that is not our issue, but just like to share that how you can explain a number. Okay. Okay. Now, expenditure on foreign travels of employees and their dependents, spouse, and minor children, including step and adopted children for holidaying and recreation. So you can make expenditure for your employees for what purpose? For foreign travel purpose. Employees include whom? Employees include employees themselves, their dependents, their spouse, their minor children, including a step and the adopted children. For what purpose? Holiday recreation purpose. But the expenditure you are making for them that cannot exceed the amount which is lower in between two figures. Now the question is which two figures? One figure is 3 months basic salary or 3/4 of actual expenditure in the traveling. That amount cannot exceed the lower figure between these two. Say 3 months basic salary is 120,000, 40,000 in each month. 120,000 is 3 months basic salary. And actual expenditure is say 160,000. In that case, how much is 3/4 of actual expenditure? Actual expenditure is also how much?
20,000.
120,000?
Yes, sir.
120,000. So the expenses you will show your income tax return for your employees that you have made for their traveling cannot exceed the lower figure between these two numbers. If it is like that, say the 3 months basic salary is say 130,000. In that case, the amount can be maximum how much? You can show which is the lower between these two. You can show
120 actual expenditure.
You can show 120,000. Okay. So let's continue. Are you familiar with the distribution of sample to the doctors by the medical goods companies or pharmaceutical companies? That the companies spend good amount of money for distributing sample to the doctors for getting their recommendation to the patients. Are you familiar with this? Okay.
Yes, sir.
Okay. So doctors receive a good amount of gifts, good amount of samples, good amount of things. It can be anything because for making the doctors convinced to recommend a particular drug has become very challenging for the pharmaceutical business in our country, because the number of pharmaceutical companies is more than 100, and we have our generic products, and it has become very for some medical pharmaceutical products, the cost is in general in our country, the price of the pharmaceutical product is very low compared to the same product in the European country or the US country or the developed country, because we can avoid some protective, we can avoid some restriction, we can avoid some TPP kind of protocol we can avoid for the reason that we are in the middle income countries and we are in the we are still in the LDC. We are expecting to graduate in the 2023. So when we are in this status, we can avoid some restriction. That's why it is very, in general, the price is very low in our countries. But the companies spend a good amount of money for distributing samples to the doctors. And in addition to the pharmaceutical companies, other companies like FMCG companies and other companies, other industry also spend a good amount of money for distributing the free samples to the customers, to the people, or to the persons who will refer their product to other users so that their sale will boost up. So tax authority knows it very well, this practice. So when you make financial statement, there is no restriction, but when it is the tax statement you are preparing, you need to be careful in a sense that there are restrictions that how much expenses you can make on spending, you can make for sample distribution. So let me give you an example of restriction that if it is a pharmaceutical company, which is in the pharmaceutical industry, and if you turn over, you know the turnover? You know the meaning of turnover?
Yes, sir.
Okay. So if your turnover is within the limit of 5 crore, is within the limit of how much? 5 crore. It is said that you can spend only 2% of your turnover for sample distribution. Your turnover is how much? Up to 5 crore. How much you can spend money for sample distribution?
2%.
2% of what?
The 5 crore turnover.
Your turnover can be any figure within the, but if your figure is within the 5 crore, in that case, this restriction is applicable for you. And say your turnover is 2 crore. Your turnover is 2 crore.
2 crore.
In that case, you are within this range. Is it?
Yes, sir.
You are within this range. In that case,
Yes.
what is the ceiling for the sample distribution expense for you? How much you can spend for the sample distribution if your turnover is 2 crore? How much? I already have mentioned the percentage.
2%.
2% of what? 2% of 5 crore or 2% of 2 crore?
So 2% of 2 crore.
Right, 2% of 2 crores. Okay. Now, if it is like that, your turnover, assessed turnover exceeds 5 crore, but not exceeding 10 crore. Your turnover is here it exceeds 5 crore. Should I write in this way? It exceeds 5 crore, but up to how much?
10 crore.
10 crore.
10 crore. T means what? Turnover. Then the allowable percentage for sample distribution is how much?
1%.
1%. Now, if you are a giant company, your turnover is greater than 10 crore. In that case, you can spend money how much? 0.5%. 0.5% of what? 0.5% of your turnover. And your turnover exceeds this 10 crore. And you can spend money up to this. For what purpose? For
Sample distribution.
free sample distribution. Okay. So let me explain few other points, then we can go for practicing one problem from the text. Can you recall the entertainment expense from the income from salary? Which one you would prefer, cash or in kind?
The in kind.
In kind. Is there any allowance? Is there any exemption available in expenditure entertainment allowance?
No, sir.
No. Okay. So your company, I mean, not your company, you are an SSC and you are the owner of a business. So you also spend money for what purpose? You spend money for entertaining the visitors who come to your business, who come to visit your business, or who come to meet your employees, right? So you also make expenditure for entertainment as a business owner. In that case, there is also a restriction that how much you can do. There is a ceiling. The ceiling is look like that your entertainment expense can be limited to a certain figure. That figure can be calculated in this way. First of all, you need to estimate your assessed profit assessed profit or assessed income based on which you will pay taxes. Condition is that when you are calculating this one, I mean the assessed profit or assessed income, the condition is that you have not subtracted anything in the name of entertainment expenses when you are calculating it. Obviously, entertainment expense is an expense. Have you got it? So say your entertainment expense is 500. We do not know that how much is allowable. We will calculate it later. Okay. So when you calculate your allowable entertainment expenses, you need to make sure that first of all, you calculate the assessed profit or assessed income without considering the entertainment expenses. Obviously, we'll subtract the allowable entertainment expenses, but you need to make sure that your assessed profit has not make any consideration for what purpose? For the entertainment expenses. Then what you need to do? I will show you in the math problem, but for the time being, you need to understand that what is the rule. The rule is that on the first of 1 million or 10 lakhs of your assessed profit, you need to multiply 4%. Say your assessed income is 2.5 million, excluding or without considering the entertainment expenses. How much? 2.5 million. The rule is that for the first 1 million, you need to take the 4%. Okay, you have got a figure here. You have got a figure here. Now, in the remaining assessed profit, how much is remaining in the assessed profit? You have considered already 1 million. The remaining is 1.5 million. Now, on 1.5 million, you need to take 2%. Now you'll get another figure. Now you do sum up. Say you have got 100,000. But say you have actually made expenditure of entertainment expenses 150,000. Now how much you can show as allowable entertainment expense? Allowable is 100,000 based on this, but you already have spent how much? 150,000. In that case, you need to subtract 150,000 before getting this number. Then when you get this number, you need to subtract how much? You need to subtract, sorry, you need to
100,000.
add back this, and you need to subtract how much? You need to subtract 100,000, which is admissible or inadmissible? 100,000 is?
Inadmissible expense.
100,000 is admissible. But out of 150,000, 50,000 is inadmissible, right?
Yes, sir. Yes.
Okay. So there is also rule for royalty, similar kind of rule. For the first 3 years of income years from the commencement of the business or profession, you can allocate 10% of the disclosed net profit for royalty. Are you familiar with the royalty?
Yes, sir.
Royalty payment, franchise payment, technical know-how payment. So for each of the Coca-Cola you consume in Bangladesh, for each of the unit of the Coca-Cola you consume in Bangladesh, the bottlers, we have the bottlers, 2 bottlers are in our country. One bottler is Abdul Monem Beverage Limited, another bottler is IBPL, International Bottle Plant Limited. Most probably it is somehow linked to the Pran MCL. So these companies are bottlers company of the Coca-Cola in our local region. So each of the unit of the Coca-Cola you consume, this company need to pay royalty to the Coca-Cola International. So there is a restriction that how much of the royalty you can show in the income statement as not income statement, tax return. For the first 3 years from the commencement of the business profession, 10% of the disclosed net profit you can show as royalty payment. But for subsequent income years, the percentage goes down to 8%. Okay. So there is another interesting figure, another interesting item that is look like that a person who has, who work for you, your employee, he has a gross salary structure from you which exceeds 15,000, gross monthly salary. But instead of providing this amount, say that amount is 20,000. Instead of providing this amount in cash, instead of providing this amount through bank transfer or check, the cross check to your employee, you are paying this amount which exceeds the 15,000 in the form of cash. In that case, that amount becomes inadmissible, total amount. Have you got it interesting? Why employers are always likely to transfer the amount through bank, not pay in cash?
Yes, sir.
Okay. What may be the likely reason for making this kind of regulation? Is there any good guess that what may be the motivation for doing this kind of restriction? Anyone? Anyone?
So in this process, the bank actually collects the revenue, or the person who are involved in taking the salary, he can familiar with the banking system.
Okay, that is kind of very holistic motivation that you as a tax authority are trying to give some benefits to the banks, and you are trying to make the people aware of the banking business or banking system. But the critical motivation for this is to trace out that how much money is actually spent. How much money is actually spent for tracing any expenditure which is not disclosed properly. Say you as an SSC, you have paid cash 30,000. Okay. But you have recorded 20,000. In that case, it is very difficult for the tax authority to find out that how much you actually paid, because the form of payment is in cash. But when you have made the payment in the form of check or bank transfer, that is kind of digital fund transfer, in that case, it is easy for the tax authority to trace out that how much money you are actually spending. It becomes difficult for the SSC to hide his expenditure or income when the restrictions are this kind of. Have you got it? Have you
Yes,
got
sir.
it? You will
Yes,
have a
sir.
tendency to hide the expenditure or income. Okay. In addition to that, I just like to add another point. In the income from house property, you will also see that if the monthly house rent exceeds 25,000 flat rent, in that case the house owner is supposed to maintain the bank account, and the flat tenant is supposed to pay the rent through the bank account. So you can easily recognize that house owner are likely to underestimate their rental income for reducing the taxable income from house property. Okay.
Yes, sir.
Okay. Let's continue. It's okay. If you make any payment which are kind of agency commission, you are making payment, or if you make payment like commission fee or any other sum in relation to money transfer through mobile banking or other electronic means, or in relation to charge of mobile phone account, or you make any payment to someone, the payment look like some advisory payment or consultancy payment or catering payment. Catering, say you have organized an event, you have taken a catering services and you want to make payment. If the person who is the payee, that means who is receiving your payment, that person does not have the TIN, that person does not hold a 12-digit TIN number, in that case that expense become inadmissible. Have you got it? You need to make sure that when you are making this payment, agency commission, mobile phone commission, related agency commission, and you are making commission like for advisory consultancy, but the payee does not have the TIN number, in that case the money you are making to that person becomes inadmissible expense for you. Okay, so before going to the math problem, I just like to show you it's probably kind of recapping something from your financial accounting for tax purposes, that tax is always concerned with the revenue expenditure, though there are some implication for capital expenditure. One thing is related to the, say you have a capital property or capital asset. So you have purchased that asset, say at a price of 100,000 original costs. Okay. So say the company has decided that it will sell out this property, but it has used this property for several years. So the property value in terms of its balance sheet is now 56,000. Can anyone tell me how the property value in the balance sheet has become 56,000 from the 100,000?
So due to depreciation.
Okay, now this value is known as written down value. Are you familiar with this term? Are you familiar with this term, written down value?
Yes, sir. Book value minus depreciation, accumulated depreciation.
Okay, fine. Okay, thanks. Now, if you have been able to sell the asset at a price of say 120,000, how much? 120,000. Now, the difference between the selling price and the written down value is how much?
So 64,000.
Is it the total gain?
Yes, sir.
Now, if I ask you to allocate this gain to the capital gain and to the revenue gain, how can you allocate this number?
So no idea.
No idea.
No, sir.
Okay. The capital gain is possible when you sell an asset over its original cost. Have we been able to sell our asset at a price greater than our original cost?
Yes, sir.
Okay.
Yes,
How
sir.
much?
So 20,000.
20,000. That is the capital gain. If we are able to sell the asset at a price less than 100,000, are there any capital gain?
No, sir.
There
No,
was no
sir.
capital gain. Okay. Now, as we have been able to sell the asset at a price greater than the original cost, obviously we have been able to sell the asset at a price greater than the written down value.
Yes,
Right?
sir.
Okay. In that case, the difference between the book value and the written down value will be considered as the revenue gain, or the difference between the total gain and the capital gain can be considered as the
Revenue
revenue
gain.
gain. Have you got it?
Yes, sir.
In any way you can come to this figure. Okay.
Okay,
Either
sir.
you subtract 56,000 from the 100,000. Why you are subtracting? Because we have been able to sell the asset at a price greater than the original cost. Okay. So this gain, revenue gain, should be included in the tax return. And this gain is also known as balancing charge, not uh, it is known as balancing charge. It is to be shown in which where the income tax return. Okay. So what you have done, you have earned some revenue gain. So it may not be possible if you sell the asset at a price less than written down
Written
value
down
or less
value.
than book value.
So written down value.
Less than written down value. Capital gain is not possible if you sell at a price less than the
Book value.
book value. Okay. Now, instead of selling the asset to a third party, you can also have a situation where you are disposing your property. You have faced an event where your asset has got destroyed and you are claiming insurance compensation. In that case, you can compare the same situation and you need to compare that how much value you are getting. And if it appears that the value you are getting exceeds the original cost, then the difference is capital gain over the original cost, and the difference between the uh, original cost and the written down value will be considered as the balancing charge.
Charge.
Okay. And
Okay,
in
sir.
case of sometimes you are familiar with the subcontract. You are familiar with the subcontract. Okay. So say you have received, are you familiar with the tariff and quota? Tariff or quota? Okay. Say only 5 producers in our country are authorized in Bangladesh to export mango. So only 5 producers. In that case, this is a kind of exclusive license given to these 5 producers. The producer can sell, transfer this license to other. Okay. So quota has some other meaning, but I'm not going there. Tariff is a part of tax which is imposed on the imported goods. Okay. So tariff is not our part here, but quota is part here in a sense of garments. In garments, if it is like that, you have a quota and you have transferred the quota to some other person who does not have that quota. So if you receive any benefit from him for transferring that quota, obviously you should receive some benefit. In that case, 3% should be shown as your income for transferring quota. And we also mentioned it earlier that for some products, 60% is considered in the income from agriculture and 40% revenue is considered in the income from business. Can anyone recall any product which we mentioned in this kind of discussion? That 60% revenue will be shown in the agriculture, income from agriculture, and the 40% revenue will be shown in the income from business. Can you recall the product example?
Sir, tea.
Tea, rubber,
Yes.
then tobacco, these products. Okay. So quickly we'll try to see a problem from the text, that is example 4. So first of all, this is a Gecko pharmaceutical company. So company and the individual business owner in the income from business have very good amount of similarities. We'll also try to see the income from business from the company perspective in the coming classes. So let's talk about it first. Say our SSC name is Gecko Pharmaceutical Company, and the income year ended on the June 30, 2019. And what is the first? We need to check the net profit reported, that is 17,983,000. And this is the accounting disclosed net profit. We started our discussion in the previous class telling that we need to make the adjustment of the accounting net profit in light with the adjustment for tax standard. Okay, so I'm just writing in the short form for the sake of time. Say income from business, we are doing calculation. We need to write down the net profit first, because we will make adjustment with this net profit. That profit is how much? 17,983,000. Okay, so we need to add back which expenses? We need to add back the inadmissible expenses. Okay, so let's continue. First of all, salary and allowances include perquisites of 5 directors as mentioned below. So can you recall that there was a restriction that how much perquisite you can pay maximum? We just have discussed. How much is ceiling for the perquisite?
5,50,000.
550,000, right? 550,000 for perquisite. Okay. Now, in which case this ceiling has been violated? For Director 1, you need to respond quickly. Director 2, Director 3, Director 4, Director 5. In which case the restriction, the ceiling has been violated?
So Director 3 and 4.
Three and
Deducted 3 and deducted 4.
The
In
3
this
and 4.
case, how much is extra?
30,000 deducted 3
30,000.
and
In this case, how much is extra?
25.
55,000.
75, right?
75.
30 plus 75. We have paid this amount in excess of the restriction, in excess of the allowable expense, right? So what
Yes,
we need
sir.
to do? We need to add back the expenses we make beyond our restriction. How much? Perquisite.
105,000.
5,000. Okay, fine. Amount paid to a contractor of taka 85,000 without deducting tax at source. What will happen to this? Will it be considered as admissible or inadmissible?
Inadmissible.
What's the reason?
Tax deduct করা হয়নি.
Right, thanks. That's why we have added it back. Okay, next. Profit includes taka 85,000 as gain on sale of asset. Which profit includes? This profit. This profit includes 85,000 as a gain on sale of asset. The original cost of the asset was taka 70,000, and on the date of sale, the written down value of the asset was taka 50,000. Is it possible to allocate the 85,000 gain in the revenue gain and the capital gain? Very quick, we just have seen this kind of calculation. How much is capital gain here? Has there been any capital gain?
Say 85,000.
85,000 is total gain. 70,000 was original
15,000.
cost.
The 15,000 capital gain.
Okay. So in that case, balancing charge is how much?
20,000.
20,000. So which amount we cannot show in the income tax return?
It's
For
a
income
capital
from
gain.
business, capital gain. So in that case, we need to add back.
So the balancing charge of 20,000 only.
So we need to add the capital gain on the sale of asset. Here, how much? 15,000. Okay. Can we recall there is a separate head as known as income from capital gain out of the 10 headings? Can you recall? Out of the 10 headings, income from salary, income from house property, income from agriculture, income from business profession, income from capital gain, income from other sources. There was a capital gain, income from capital gain.
Yes, sir.
Can you recall? This
Yes, sir.
gain will be transferred to that heading. Okay. Okay, next. The company lodged a claim against the demolishing of an asset and recovered taka 70,000. Make it very clear. Has the company received any compensation yet?
No, sir.
The company has not received any compensation yet. That's why it has not been made any transaction. Okay. So this is some kind of caution you need to make when you will prepare your return. Okay. We have not received any claim. We have not received any compensation yet. Okay. Next. The company has income of taka 42,000 from tea grown and manufactured in Bangladesh, which was not considered at the time of computing profit. It has not been included anywhere. Okay. Now, how much of this will be included in the income from business? 40%. 60% will be in the agriculture. So I'm writing it separately here because we need to add some income from tea garden. You can see rubber, you can see tobacco like this. Okay, 40% of which figure? 400 to 425,000. Sorry. Yeah, 420,000.
20,000.
40% of 420,000. How much?
168,000 maybe.
168,000. Okay. Next, this one. The company has transferred export quota of garments to another company whose export value is estimated at 800,000. No income is reported in profit and loss account. What do we need to do? What do we need to do? We need to take the 3% of this we just have mentioned. We need to take 3% of the export value and we need to show it as income, right? Income from what? Income from transferring
Quota.
of quota. 3% of which amount? 800,000.
8 lakh.
You will see
240,000.
240,000. It is, the figure is how much? 3% of 800,000. Is it 240,000?
So 24,000.
It should be 24,000. 24,000. Okay, let's continue. If I take time up to 440, will it be problem for you?
No, sir.
Okay. Then entertainment expense charged was taka 450,000. We'll consider it later because we need to get the taxable profit first, excluding entertainment expense. Right now, we are not considering it. Okay. Finance director received for foreign travel. Their space has been mistakenly removed. Foreign travel allowance of taka 500,000, which is charged against the profit. It has already been charged. He has also received similar allowance in last year and it was allowed at that time. I didn't mention the rule when I was discussing the rule. The rule is that in case of foreign travel, you can make the travel and there is also a restriction on the how much you can spend for it. I already have shown to you that 3 months basic salary or 3/4 of actual expenditure, which one is lower, that lower is the maximum. Okay. Another rule is that in each of the 2 years, one travel is granted in each of the 2 years. Have we got it? In each of the 2 years, one foreign travel is granted. Now, from this statement, what do you understand? Was this travel granted by the tax in accordance with tax standard or it is in violation?
So in violation.
Violation.
In that case, we need to add back the expenses we made. Okay. How much? Foreign travel, how much? 500,000. Okay. Royalty expense charged taka 112,000. Royalty expense charged 112,000. The rule for royalty was that for the first 3 years, it can be how much? 10% of the, can you recall? 10% of the
Net profit.
10% of the net profit. Okay. 10% of the disclosed net profit. So if you see the disclosed net profit here, 17 million, and you check the 10%, you will see that this royalty payment is within the limit. So you do not need to make any further adjustment. Okay. Now, we have two remaining items. One is expense for free sample distribution. Okay. This is to be checked with the turnover, because the turnover, the ceiling is based on the turnover. Turnover is more than 10 crore or more than 5 crore and less than 10 crore. Is it more than 5 crore, less than 10 crore?
Yes, sir.
Okay. Is it a pharmaceutical company or a food company or other company?
Pharmaceutical.
It is a pharmaceutical company. In that case, how much money it can spend for sample distribution? Can you recall the percentage?
So
No,
1% of the turnover.
1% of the turnover. So if you calculate the 1% of this turnover, you will see this amount is far below the maximum ceiling. Okay. So in that case, you do not need to make any further adjustment. Then let's talk about depreciation and the entertainment. First of all, entertainment expense, which has already been charged, that is 450,000. As it is, we need to consider it separately by seeing that how much is allowable. Right now, what we are doing, we are adding back the entertainment expenses, what has already been charged. It has already been charged. We are adding back these expenses. Then we will check that how much is allowable. That allowable we will subtract. We have added it back. Okay. Now, before getting the calculation for entertainment allowance, what we need to do, we need to make the calculation finished here up to depreciation. In this way, say, if we write depreciation, regarding depreciation, we already have seen that tax depreciation is 180,000, but accounting depreciation which has been charged is 250,000. Now what we need to do, we need to subtract the accounting depreciation, sorry, add back the accounting depreciation. Then we need to subtract the tax depreciation later. Can you add back all this number? If you add back all this number, you will get 1,408,000. This is the summation of which numbers? This is the summation of all inadmissible expense. Now, if I subtract the admissible expenses, we need to write the admissible expenses. We need to write the depreciation first, because we need to make all other calculation before calculating entertainment expenses. That is the rule. Okay. So what is the tax depreciation?
So 180.
180. Okay. Now, what you need to do with this number, you add this number and subtract this number. Then I'm showing you the further calculation. Here 17,983,000 and add this number and subtract this. Mention the figure you are getting.
19,211,000.
19,211,000. Now, based on this number, you need to calculate that how much expense is allowable for entertainment. Based on this. Okay. This should be added separately. Okay. So this is the procedure. When you will do practice, after several practices, you will get the procedure clear. Okay. Now, can you recall that for the first 1 million, the entertainment expense should be at the rate of 4%, and for remaining, the expense should be 2%. This is the allowable limit. Now, in our case, what is the remaining from this 1.9211 million?
9,200,000.
Here we have 19.211 million. So still we have 18.211 million. Is it? Have we got the total here? Total allocation here?
No, sir.
This is the rule from the text we already have mentioned. Can you recall that we have given a figure, say we have 2.5 million disclosed net, we have all adjusted profit before considering the entertainment, and we have said for 1 million you need to take the 4%, and for the remaining 1.5 million you need to take the 2%. Can you recall these numbers we practiced earlier when we are discussing?
Yes, sir.
Okay, just relate this here. We have now this figure, how much? 19.211 million. Okay, now according to the rule, we have taken the first 1 million. You will see that for the first 10 lakhs, the rate is 4%, and for remaining amount, the rate is 2%. Now 10 lakh is equal to 1 million. Is it not 1 million equal to 10 lakh?
Yes, sir.
Okay, so 1 million multiplied by 4% and 18.211 million is for this amount, you need to take the 2%. So you will see that your allowable limit is 404,220. Now, how much you already have made?
450.
Now, we already have added it back. Now, how much we can subtract?
So the difference?
As we have added the total amount, it is the procedure. We have added the total amount. We need to add back, we need to subtract the total amount which is allowable. Okay. Now the total allowable is how much? 404,200. Okay. Then when you will do the final calculation, you will get the figure from here, and you have other two figures here, and then you will get the income from business for our SSC Gecko Pharmaceutical Company. Is it clear? Or you
Yes,
want me to repeat anywhere?
No, sir, it's clear, sir.
Okay. So do the practice using other problems. I already have taken 3 minutes extra beyond your allowable limit,